Good evening, all. Ira Epstein with your SPDR ETF wrap-up for this Tuesday, and we're at the 17th of May, 2022. So as you look at the market, more green than red, we see that right away. I'm not surprised to see the bonds down a little bit. You know, Fed Chair Powell today was at a Wall Street Journal conference, and when asked about interest rates, what's he going to say? He's got to say just what he's going to say at the head of the Fed. We're going to do what we have to tame inflation. Code word, we're raising interest rates until we get ahead of the market and we stop demand for goods. That's the code game, and that's what they're going to do. That is a headwind for the gold market. You know, the gold is going to count, an easy currency would help it, but you're getting bank after bank raising interest rates. That means they're going to be paying dividends. Maybe people don't want to own gold. Maybe it's better off to own something that pays you something in a time of inflation. And gold hasn't done its job per se, running with the inflation crowd and or the war in Ukraine. Bonds even a little bit lower. But we did get the rally that I was expecting in all the stock indices because you lost the bearish embedded readings. Forget the fundamentals. We talk chart action here. And in chart action, it's set up. When you have a locked-in bearish embedded reading, which means the slow stochastic's going sideways and it pops out of that signal, it's pent-up demand, and the market generally goes with the flow, and the flow would have been in the upside. We'll get to that in a minute. I've dropped Rivian, although I think it's an interesting play. I set it at $20, and I haven't changed my mind. I do think it's good, although Lordstown has got its problems. People are wondering if it will survive. In any case, SoFi, the financial services company, this is one of these companies that puts together platforms and you go and you get loans from them. And it's an interesting business if, in this time of rising interest rates, the loans that you service aren't the type of loans that the people have such bad credit that they go south on you. Yes, you can get a higher interest rate, but can they pay? That becomes the real problem. Lending Club had that problem, if you'll remember, in their growth. Then they matured into a whole different business, and it's interesting that the stock hasn't grown better than that in this environment. I'm a fan of that. In SoFi, you can see you've had this nice run in the market to the upside. The pattern is one of a higher high, lower low, but it has come down dramatically, as did all of these type of companies in this type of field. The question is, are they bouncing? And the question is, the reason I brought it on, is this their opportunity in these kind of markets to service that sector, the people that can't go to the banks? Could be interesting. When you look at the market, it's back over for the first time in a while, the 18-day average. It got up here for a few days, then fell back under, and that's what it's been. The pattern has been one to get over the 18-day average because you've been in a downtrend and fail. You don't stay over it very long, and you stay under it a longer period of time. I don't know if that's the case now or not. My instincts are it is until it isn't. When I look at where you're at the upper Bollinger Band, so you're at the prime place for the market to fail again. If we go back, you failed up here at this point. You didn't fail at these right through there. You certainly failed right there again. So you're in the zone, let's call it that, where the market should encounter that type of resistance as a chartist. One of these times you have to develop enough sideways action, and when you develop sideways action of the Bollinger Bands, then you can get more excited. Could it be a base? You're getting overbought up at the resistance period, and you're not trending. On AMC, as I said, I thought the market would be in this area trying to bottom out. I frankly thought closer to 12 than when the market got to the 10 level, but I haven't changed my opinion. You've just got too much going for you. You got, the 27th Mavericks coming out with Tom Cruise. You got a bunch of other, that'll be blockbuster movies that come out at this time of the year, but it's going to be a short-lived window. And in that window, as the market comes up, I'm going to ask again, what do the movie theaters do to change where their business model can survive in it? Because you'll get an influx of the kids as they're not in school, blah, blah, but prices are high. What big of an influence you're going to get? On Apple is one of these that got oversold against the Bollinger Band and has broken the downtrend pattern. So with the action that took place today, You finally got past that pattern of lower highs, lower lows, and now you're getting what we call a bear market rally. Yes, it's in a bear market right now. The resistance is the 155.24 level, a target. That number will drop a little each day until you get to it, and then we'll see what it can do there. But I say bear because when you're under the 18-day average in the swing line, which is this brown line turns up and gives you higher lows and higher highs as a pattern, it's a contra-trend rally. Trend being determined by price relationship to the 18-day average of closes and momentum turning up. Disney, same pattern. So Disney had been running, hit the Bollinger Bands. Finally, it lost the embedded reading here, which is a little different than you saw in the Apple. Losing that to me is the sign it wants to make a run to the 18-day average of closes before it gets back under these lows, if it's going to get under them. And it too has the same thing going for it than movie theaters do. This is the time of year where families book their vacations. Hey, let's get going. I'm going to get off my job or whatever it is. We'll take the kids to the parks, so on. And theme parks are monstrous for Disney. Does it do real well with its streaming services at this time of the year? Yeah, it does, but it's got movie releases. They'll be in all the different shows, so that's there. Then XLF, here too, momentum turning up. I'm looking for failures against the 18-day average of close. So we have a common theme that I'm looking for. Bounces away from the Bollinger Band. Many markets now changing to a pattern of higher lows, higher highs with the 18-day average as targets. Same thing in XLI. Markets momentum, if you take a look, lost the downside momentum here. Did it ever embed? Both numbers under 20, under 20, under 20. When you get over 21 on a close, you don't want to be short anymore. The odds favor you're going to run to the 18-day average of closes. Got it? It's pretty simple. You can teach your kid this, but I make it look easy here. You'll see on my course how easy it is for you to learn it. You won't get it from all here. There's a couple of caveats with it. Higher lows, higher highs. Well, this looks like a stall zone as a minimum for the semiconductors, but if they wanted to run, then the upper Bollinger Band. I think the bulls grabbed control tonight of the market, and until you take out this 169.18, I think you're going to get buyers against the 18-day average, tight stops, looking to see if they can get up to that 186.75 level. The home builders were able to shake off the index falling back. The index is still good. Home builders are still in a positive mode, but it's been hard with interest rates going up. Higher priced homes, they're going to sell for a lot of cash. People have cash, so they don't need mortgages quite as bad as you might think. On the energy sector, each time we've gotten to the Bollinger Band, the market's given you corrections. Why should it be different this time? So I'm one that's looking for that to back off from there. Gold is just a lost market. It still stays bearish, bearish, bearish. Lower highs, lower lows until the red line closes over 21. I think these rallies get sold and the market looks for the lower band. At some point that will all end. It won't tell me the exact time, but we'll have an idea via the slow stochastic, and at least today that day wasn't there. Same in GDX or not. No. You closed 21 in GDX. Today, you were to come out of all shorts in GDX. I don't care if it goes lower. You lost the embedded reading. If it re-embeds, and it can do that tomorrow with a hard break, fine. If not, you don't get back the embedded reading, watch out. You're probably coming back into those levels on the chart. This was the warning sign, first one that we've had not to be short. How good do I feel that you lost the embedded reading here in the copper yesterday? And I said, watch out, you're going to make your run up here because you lost that reading. Bingo. Yes, I feel good with that. You can do this too. This isn't that hard, I want to tell you. TLT. I'm not a bull. I think this is big resistance. I think you look at the red line and you say, hey, anytime it gets up there, it's going to run into a headwind called the Federal Reserve. And that's right what you're doing. And I think you're going back to the black lines after those type of run-ups. In the dollar index, you lost the embedded reading. Now just take a look. Here you have it. This was yesterday. Today, you hadn't lost all day. Boom. You're down to the objective already. I don't know that it has much more downside left in it one way or the other. And if the dollar's down, 40% of it's made up of the euro, so it's going to go the other way, and I don't know that it has to go much higher. So I think you came to a lot of ends of plays today, and now it gets exciting from that. You know, I cover so much of this in what I write, what I do in the morning recordings for my subscribers. You only see my hands behind my back here, by my design. But a lot of what we teach is in our free futures trading kit. So be you a beginner, be you somebody that wants to freshen up, you want to learn slow stochastic studies, you want to learn pivot points, the Arun indicator, a lot of this is touched on in these courses. I give you a free course, I give you an idea of how I teach, and it's the full course on pivot points. Pivot points are a great little tool if you're an in and out trader. It's not meant for a position trader guy, but the Arun indicator is. We link to all the CME courses so that you can take them for free and you see the different ones they are. And of course, you can get our free charting software, our mobile app, everything else is included in this. How do you get it? Go to our website. Under free offers, it's right there. At the same time, you can take your cursor, just move it up. You'll see an icon, give it a click, and away you go. I'm Ira Epstein. I'll see you tomorrow. Have a great day.